What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. On this channel, we talk about the markets, and we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals going over S&P 500 and the NASDAQ 100. And at the end of this video, I am going to break down 4 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And first and foremost, guys, I do want to apologize. Last Thursday, I couldn't post our video in English because I filmed the video entirely, guys. And when I was about to edit the video, I noticed that the audio was muted. I don't know why. So I had already recorded my video in Spanish. It was a bit late, so it was absolutely impossible for me to record another version or another video in English on Thursday. So I do apologize for that. Okay, what happened today in the markets? Today we had a tiny red day with the Russell 2000 being the worst performance index out of the bunch, going down 0.53%. NASDAQ pretty much broke even. It went down 0.04%. Dow Jones, the same thing, guys. It went down only 0.04%. And the S&P 500 broke even. It closed today's trading session at 4,682 points. Keep in mind, guys, two important facts for this week. First, later on today, we are going to have President Biden having a virtual meeting with Xi Jinping, the president of China. That is going to be a market mover, no doubt about it, mostly when it comes to Chinese stocks in tomorrow's trading session. So let's see what that plays out like. And also keep in mind that on Friday we are going to have a monthly options expiration. That is going to be on Friday. So we might see volatility picking up as most of markets participants just enroll their options positions before they are forced to. Two important facts to keep in mind for this week. Another important factor that we need to keep in mind is the 10-year Treasury yield, guys. It is starting to recover. It is starting to go up once again. And today it went up 2.59%. So I'm thinking, guys, that if the 10-year Treasury yield keeps on going up, it is going to find an important area of overhead resistance at 1.63%. We are talking about a former area of resistance back from May. And I guess that most of you guys already noticed since last Wednesday, when we had a worse than expected CPI data report, we have seen a lot of higher multiple stocks under pressure. I am talking about FuboTV, SoFi, Plug Power, Palantir, and so forth. DraftKings as well. And why is that happening? Because the 10-year Treasury yield is going up, guys. So we have inflation fears out there. And all of the companies that I just told you guys about are companies that trade publicly today based on future earnings. So what could happen? What's let's say, the logic behind the 10-year Treasury yield going up and this fact affecting in a negative way higher multiple stocks? So all of the companies that I just told you about trade publicly today based on future earnings. So if inflation keeps on going up, if inflation happens to get out of control, that is going to force the Federal Reserve to hike interest rates sooner than expected. Interest rates, or let's say higher interest rates, is bad news for everyone, guys. That's not good news for anyone, right? So if we happen to have higher interest rates, or if the Federal Reserve happens to hike interest rates sooner than expected, that affects in a negative way all of the companies that trade publicly based on future earnings, because that makes way harder the predictability of future earnings and future cash flows. So that's the situation that is going on over here. And if the 10-year Treasury yield keeps on going up, if it bursts above 1.63%, and if it maybe fills the next gap up to 1.69%, needless to say, if the 10-year Treasury yield bursts above 1.70%, we might still see most of the stocks that I just told you about, and most of the higher multiple stocks under pressure. So this is something that we need to keep a close watch on. And take a look, guys, at how the Russell 2000 was the worst performing index today. It went down 0.45%. This is pretty much based on inflation fears, because most of the companies or the stocks that trade inside the Russell 2000 are stocks that trade on higher multiples. Those are expensive stocks. When we buy a stock such as Fubo or SoFi or Plug Power or Palantir or DraftKings, we are pretty much paying an expensive price today because of the huge growth, because of the potential huge growth that one of these stocks might have in the future. So whenever there are inflation fears, the markets usually sell out of these kind of stocks. Now, if we take a look at the sectors that trade inside the S&P 500, take a look at what happened today, guys. We had, for the most part, a defensive day. Utilities was the best performing sector today, going up 1.34%, and energy was the second best performing sector, going up 0.83%. So the best performing sector was a defensive sector, a sector that the big money of Wall Street goes after when there are a lot of fears out there. Because when we talk about utilities, guys, what is going on over here? In a potential situation of crisis in any economy, people always pay their utility bills. Let's say, your electricity bill or waste disposal and stuff like that. So this is a sector that the big capital of Wall Street goes after when there is, let's say, uncertainty out there. And this is what happened today. We have inflation fears. The 10-year Treasury yield is going up. And today the best performing sector was utilities. And the second best performing sector was the energy sector, which actually wasn't doing, very well today at around noon, but it picked up because the prices of oil recovered in a very, let's say, important way into the closing bell of today's trading session. And now let's go ahead and take a look, guys, at 3 trades that I closed in today's trading session. The first one, guys, let me show you. I have been selling covered calls on EVgo left and right. So let me show you over here. In the case of EVgo, I own 250 shares at an average cost of $17.80. And as of now, I have an unrealized loss of $363. So let me scroll down. And this is a covered call, guys, that I sold on November 11. I think this was last Thursday. So I sold 2 covered calls being paid because I sold those covered calls. So I was paid $390. This was the 20-buck call that expires on December 17. And today, EVgo fell off a cliff. So I was like, you know what? I am just going to lock in the profit. So I bought back the 2 contracts that I sold on November 11, and I paid $220. I made over here $170 selling covered calls in a matter of something like 4 days. This was a good deal. Let's just put it that way. And take a look at this, guys. Tesla. So on Friday, I sold a covered call of Tesla. Let me show you over here. Because Tesla fell off a cliff today once again because of the, let's say, the falling out that Elon had on Twitter with Bernie Sanders. And yeah, Tesla dropped today something like $80 or so. So this is just a coincidence. I have nothing to do with either Bernie Sanders or Elon Musk. So on Friday, guys, I sold the $1,300 call that expires on December 3rd. And I was paid $625. And today, since Tesla fell off a cliff, I was like, you know what? I am going to lock in the profit. You never know. Tesla is such a volatile stock. So I bought back the covered call that I sold on Friday, and I paid $300. So I was paid $625 and I paid $300. I ended up making over here $325 selling one covered call over the weekend. Such a nice trade, guys. And I also closed a covered call on CRISPR Therapeutics. I own 100 shares at an average cost of $95. So I sold a covered call on CRISPR Therapeutics on October 29. I sold a $105 call that expires on December 17. And I was paid $347. And today I decided CRISPR Therapeutics was also under pressure. This is also a higher multiple stock. So I decided to buy back the call that I had sold, and I paid $135, guys. So I ended up making over here $212. So today, guys, selling covered calls or closing covered calls that I had already sold, I made $700. So wow, this is the magic of selling covered calls, no doubt about it. Now let me go ahead and take a look at the S&P 500. And in the case of the S&P, and as I said in the introduction of this video, so the S&P pretty much broke even, and it closed today's trading session at 4,682 points. And let me pull up here, guys, the 5-day, 5-minute chart, and take a look at how we found support today at 4,673 points, 46.73. We also found support at the same spot last Friday, and also we also found support at that area last Tuesday. So we are talking about a very important area of lower support for the S&P, 46.73. And if I pull up here the 4-hour chart and I zoom in, the first thing that is worth pointing out, by the way, guys, about the 4-hour chart is the relative strength index of the S&P. It is at 63 points. It is healthy. It is a bit higher. It is a bit high. Let's just put it that way, but this is nothing, that we can compare with the excessive levels that the S&P 500 was showing last week, with its relative strength index sitting at 87 points. So we can make the case that 63 points is a healthy level for the relative strength index of the S&P. So in my opinion, guys, and I could be proven wrong, we are seeing a process of consolidation slightly above 46.50. So the most important areas of lower support that I am going to be looking at is obviously 46.74, which acted as lower support today. And if that area of lower support happens to be broken to the downside, I am going to be looking at 46.50. But it looks like, as I was saying, that we are seeing a process of consolidation slightly above 46.50 that might let the bulls of the S&P gather momentum in order to make another push higher without the S&P being in an overbought condition. And mind you, guys, the only negative scenario that could unfold, and this is obviously a possibility, who knows, would be the bears of the S&P breaking 46.24 to the downside. And why do I say that? Well, because if the bears happen to be able to take on 46.24, they are going to be breaking this 50 SMA on the 4-hour chart to the downside, and at the same time they are going to be breaking a former area of support to the downside of November 3rd. So that is going to be, this would be definitely bearish price action, but let's not get ahead of ourselves. We haven't gotten over there quite yet, and unless 46.50 is broken to the downside, and as I just said, guys, we are seeing a process of consolidation slightly above a very important area of support in the case of the S&P. And in the case of the NDX, the NASDAQ 100, let me pull up here the 4-hour chart. We can see the relative strength index of the NDX at 57 points, very healthy from a technical standpoint. And as I was just saying, in the case of the S&P, guys, I think that in the case of the NDX, we are seeing a process of consolidation slightly above 16,000 points. So if the NDX keeps on trading sideways, because the NDX didn't do much today, guys, it only went down 0.07%. So we might see a process of consolidation, as I just said, slightly above 16,000 points, that might let that might let the bulls of the NDX gather momentum in order to take on the next big area of overhead resistance for the NASDAQ 100 at 16,300 points, which is an area that acted as lower support on 2 occasions in recent days. And I do believe that once 16,300 points happens to be taken on, the NDX is going to be once again off to the races. And mind you, watch out for this 50 SMA on the 4-hour chart at pretty much 15,950 points, because if this area of lower support happens to be broken to the downside, I think that bearish momentum is going to pick up in the case of the NDX. And now let's go ahead and take a look at Lucid Motors, guys, which is going to be the first stock of this video, which is reporting earnings today. Let's see if the earnings report of Lucid is already out. Let's see. Okay, let me pull up here the 4-hour chart, and let me pull up the 1 day, 1 minute. Is the report out? It looks like it is. Let me see. So Lucid Group confident in ability to achieve 20,000 units in 2022. I was asked by many of you guys about the earnings report of Lucid, and I told you this is a company that isn't making any money as of now. Lucid started to deliver some vehicles just a few weeks ago, so I told you this is going to be pretty much all about the commercial guidance, the guidance. So let me see if I have something more concrete. No, I don't have anything. So Lucid Group confident in ability to achieve 20,000 units in 2022. We don't have EPS. We don't have revenue. Let me see. Do we have anything? Lucid Group balance sheet to close 3 quarter has about $4.8 billion in cash. Well, this is an acceptable amount of cash, guys. In cash, as cash position, in cash and cash equivalents. What else do I have over here? Lucid announces Q3 highlights, says customer reservation rose to 13,000 in Q3. Wow, that's a lot, right? 13,000 reservations in Q3. And let me see, Lucid announces third quarter 2021 financial results, and Lucid Air wins 2022 Motor Trend Car of the Year. So it looks like, and despite the fact that we don't have any concrete information about revenue or EPS, this earnings report of Lucid is full of good news, guys. Yeah, they have an acceptable amount of amount of cash and cash and cash equivalents, and the Lucid Air won the 2022 Motor Trend Car of the Year. So it looks like things are looking up for Lucid Motors, guys, no doubt about it. So Lucid is up after hours. It closed today's trading session at $44.88, going up 2.16%. And after hours, we find the stock of this company up almost 4%. So let me pull up here the 4-hour chart, and let's see what could be potentially happening tomorrow. Lucid looks very bullish over here, guys. No doubt about it. We can see a clear uptrend trading above the moving averages, and we have a clear resistance at $48.26. And I'm going to draw a line over here. So I'm thinking, guys, that since this earnings report was very, let's say, positive for Lucid, I think that momentum might kick in tomorrow, guys. Take a look at the insanity that we are seeing in the case of Rivian. I think that Rivian closed today's trading session at $150. So most of the electric vehicle related stocks are doing pretty well as of now. So what could happen if tomorrow Lucid burst above $48.90? I think that all-time high for Lucid, guys, is at $60, right? $64. Jeez. Wow. So let me pull up here once again the 4-hour chart, and let me zoom in here. So we might make the case that Lucid is starting to consolidate slightly above $43.50. We are talking about an area that acted as lower support in today's trading session and also acted as lower support back on November 8th. So watch out tomorrow for Lucid, guys, because as I just said, we had good news in regard to its Q3 earnings report. So anything that looks like a consolidation process slightly above $43.50 or $44 might be a buy. Let's say that we purchase shares of Lucid at $44.13 each. And if we write them up to $48.36, which is the next important gap that the bulls of Lucid are going to have to fill, we are looking at an 8% profit trade. That would be a very, but very nice trade to be taken. And mind you guys, watch out for Lucid tomorrow, because this is the stock of a company that when trades on good volume and momentum, it can go up like crazy. So I wouldn't be surprised if $49, let's just round it up, happens to be broken to the upside. I wouldn't be surprised if Lucid fills the next gap up to $55, guys, which acted as resistance back in the beginning of February. So anything can happen tomorrow when it comes to Lucid, and obviously the stock of this company is going to be on the very top of my personal watch list tomorrow, no doubt about it. Now let's go ahead and take a look at Ideanomics, which is another company that was reporting earnings today. Let's see if the report of IDEX is out, and it looks like it is. And yeah, I mean, IDEX isn't doing much as of now after hours. Let's see what happens over here. Now, they are rescheduling their earnings report. I didn't know that. So, Ideanomics to reschedule third quarter 21 results. Let's see. Okay, which had been previously scheduled for Monday, November 15, 2021. The company will share details for the revised scheduling, including the timing for the earnings conference and call and webcast once the new date has been set. So we have, just like in the case of Tattooed Chef, another company that is pushing back its earnings report. And in the case of IDEX, I think that this is the second time that they push their earnings report for Q3 back, right? Let me see, which had been previously scheduled. No, this is the first time. Okay, that's fine. So this is the first time that they push it back, just like Tattooed Chef did. And what could happen? Let's go ahead and take a look at what could potentially happen in the case of Ideanomics. This 4-hour chart looks pretty horrible, guys. A clear downtrend. Let me zoom in here on the 4-hour chart, and as of now, IDEX is trading slightly below this 180 SMA on the 4-hour chart. IDEX went down today 1.51%, and it closed today's trading session at $1.96. You guys know that I am investing on IDEX at a long term. This is a speculative position for me. I am investing a small amount of money that I am willing to lose because I understand, I am aware of the risks involved, because this company is pretty much at a still speculative stage. But since I do believe, guys, that decarbonization is here to stay, and this company is investing in a lot of companies that are developing, let's say, clean energy transportation means, I think that this company is going to do pretty well at a long term. And remember that Ideanomics has two branches. First, they have IDEX or Ideanomics Mobility, which is a branch of the company that is focused on electric vehicles and, let's say, clean energy related companies. And we also have Ideanomics Capital, which is a branch of the company that is focused on decentralized finance pretty much. So I really like the business model of this company. I think that this company is pretty much basing its business model and disruptive technology. And if the world happens to evolve the way that I think it is going to evolve 5 years out, I think that the stock of this company has a first shot of being at a higher price relative to the current price of Ideanomics. From a technical standpoint, guys, this is a no touch. I think that my shares at an average price of $3.30 each. So I wouldn't force anything over here. The 4-hour chart looks pretty bad. As I just said, we have a clear downtrend. IDEX is trading below its moving averages on the 4-hour chart, this 50 SMA and this 180 SMA on the 4-hour chart. So the only way that I would be thinking, I would be considering taking a trade on IDEX or maybe adding more shares to my long-term position would be seeing IDEX bursting above $2.03, which happens to be an area in which the stock of this company was rejected back in mid-October, and we are also talking about a former area of support back from late September. Watch out for a burst above $2.03, guys, because this is a stock that when trades on good volume and momentum can make aggressive moves to the upside. So if IDEX bursts above $2.03, the next gap that is going to have to be filled is going to be up to $2.15, which is an area in which IDEX was rejected today, pre-market, and also back on November 1st. So if we were able to take a momentum trade on IDEX, guys, once it bursts above $2.03, and if we ride our shares up to $2.15, we're looking at a 5.36% profit. So don't sleep on IDEX, guys. And let's see when their earnings report is coming out. Now let's go ahead and take a look at AMC Entertainment, which went up today 6.70%, and it closed today's trading session at $42.68. And AMC today did the opposite relative to the Russell 2000, which is the index in which AMC trades, because the Russell went down almost 0.50%, whereas AMC went up 6.70%. Take a look at the relative strength index of AMC, guys. It is sitting at 65 points. So I'm thinking, guys, that AMC is about to burst above $44.40. If that were to happen, and mind you, $44.40 happens to be a previous area of support back from early September and also back from early June. So I'm thinking, guys, that momentum is going to kick in, and mind you, AMC bursts above $44.40. The next gap that is going to have to be filled is up to $48.70. We are talking about a former area of resistance back from late August, and the second $48.40 each is broken to the upside. AMC is going to be off to the races. The next gap up to $52 is going to be easily filled. $52 is a previous area of support back from June. So let's say that we pick up some shares of AMC once it bursts above $44.50. Let's say that we pick up some shares at $44.86. And if we write these shares up to $52, we are looking at a 14% profit. And don't forget, guys, that here recently, a few days ago, unfolded a golden cross on the 4-hour chart. More specifically, back on November 9. So AMC is looking extremely bullish, and I do believe that we are about to see $52 anytime soon. And now the last stock of this video is going to be the stock of a company that I actually bought today, guys. So let's go ahead and take a look at Twitter Inc. Twitter went up today 1.34%, and it closed today's trading session at $52.95. So let me show you guys, because I usually, not usually, I always put my money where my mouth is. I gotta be fair with myself. So today, this is not the right portfolio. Okay, let me look. Twitter, let me show you. Okay, in the case of Twitter, today I purchased 150 shares at an average cost of $53.36, and as of now I have an unrealized loss over here of $38.24. So what's my plan over here? Take a look, guys, at how the bulls of Twitter fell today right at this 50 SMA on the 4-hour chart at $53.53, which happens to be a former area of support back from early May. So my plan over here, guys, and considering that the relative strength index of Twitter is at 51 points, I do believe that the second the bulls can take on this 50 SMA on the 4-hour chart, as I always say, on good volume and momentum, the next gap up to $57.55 is very likely to be filled. $57.55 is a previous area of support back from early October and also back from early June. So my plan is selling out of my shares at $57.50. So if I were able to take this trade the way that I am describing it, selling out of my shares at $57.55 from $53.50, I am looking at a 7% profit. This would be the trade that would save the week. So I am actually thinking, guys, about adding more shares to this position that I opened today if tomorrow Twitter happens to trade slightly above $53. I think that that is going to be a sign that the bulls are gathering momentum in order to make the next push higher up to $57.50. And with Twitter, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.